Welcome back. House prices continue to rise and some doomsday merchants keep trying to spook us by talking about housing bubbles. So what does one of the best property statisticians in the country say? John Edwards, the founder of Residex, is with me in the studio, and he'll also tell us where are the best places to invest in if you want to get into the property investing market. How are you, mate?
Very good.
I know, I won't even ask you housing bubbles because you're always quite dismissing of it now, but maybe I should say, if Sydney kept growing at 15%, would you start worrying about housing bubble?
Absolutely.
Yeah,
I was getting worried a couple of quarters ago.
Yeah. Okay. If you're getting worried, then we should treat it reasonably seriously.
But I'm comfortable now.
I thought you might say that as well. Okay. Well, you've got some charts showing capital cities.
Yes.
Let's have a look at that first, and we'll talk to that.
Okay. I think the first one probably is a graph that's got 4 lines on it.
Yeah.
And they're really the growth rates going across the east coast of Australia.
So what is, for example, the red one, John?
The red one would be Sydney.
Yeah.
The green one is Brisbane.
Yeah.
And then the light red one is Melbourne and then Perth.
Okay.
Now, what you can see from that is that every market across Australia is in fact now starting to slow.
Come off the boil.
And that's why my worry about the bubble has gone.
Okay. And Sydney's flattening.
Yes, well, actually, if you look at Sydney, not in trend terms, but in real number terms, you'll actually find that in the last couple of months it has definitely started to trend down.
Okay. Now, by the way, trend down doesn't mean that it's going negative. It's just that the 15% might be a 12% or a 10%.
That's right.
Okay. So people might see the fact that Brisbane's gone off the boil. Well, Brisbane might have been doing, well, what was it doing about, what, 7 or 8%?
Well, we can have a look and tell you exactly what Brisbane was doing, but in fact...
Brisbane has a good prospect, everyone keeps telling me.
That's right. Yeah. All markets across Australia really have been doing better than they have done. However, I think that all of the hype in the market about markets doing really, really well is wrong because the whole market is so different in one state to the next.
As that chart shows.
Absolutely. The only market that's really doing well is Sydney, and Melbourne, for some reason, has been doing well, but I think it's going to turn down.
And the line, the blue line, is it that's gone negative? Is that Perth?
Yes, it will be Perth.
Yeah,
yes.
So, but Perth did fantastically well for a long time, didn't it?
Yes, and you can't expect much else, given that the resource sector is starting to slow, and we've got our. But I mean, when you look at it, it's growth in terms of the state's product. It's really very good.
Okay, all right. So let's go to the chart now, or the table that talks about house growth, right?
And in that particular chart, we've got and there it is there.
Yeah.
You can now see what the capital growth rates were for each capital city and what the median values are and the year. And now look at Sydney, 15.37% growth for the full year. But you can see in the last month the growth rate really now is quite small at 0.23 as against the quarter's growth rate of 3.77. So that's the slowing that you're starting to see.
And also on a quarterly basis the ACT is down and so is Darwin.
Perth, yeah, and when you start to have a look at both Darwin and Perth and you look at jobs and you look at the gross state product, you can start to see why. But at the end of the day, when you've got such a large volume, and I think it's 6,000 jobs the federal government has decided it wants to axe in Canberra, you can't be very positive about that.
It spooks the market.
Absolutely.
Yeah. Okay. But historically, John, ACT's been a very good market to be an owner of apartments, hasn't it?
It's been relatively good. I'm not going to say that it's been terrific. I've forgotten the exact percentage, probably 60 or 70% of your total gross state product is actually coming from the federal government. And so if you've got a government that's actually turning down its expenditure, then the whole of the economy is going to turn down in that area, and that's exactly what's happening. Okay. And we've got a slight oversupply of stock in the ACT as well.
Okay. What would you say about what you're seeing with the home unit market?
Basically, across the whole of Australia, we are getting into an oversupplied position with respect to the home market, housing, the unit market. And if there are any bubbles that are likely to eventuate, that's probably where they're going to come from because of the supply issues that are going on. And the other thing, too, I think that we've got to, and I get it right about this, I think that people are seeing housing prices go up, and I read the reports by the Governor of the Reserve Bank and others that keep on telling us, well, don't worry about foreign investment. But at the end of the day, I'm not sure about that. I think that it's not been put out there correctly. In that what's going on is that you've got, number one, the government not checking when somebody leaves Australia and they're on a temporary visa, because they can buy second-hand property if they're on a temporary visa.
Right.
And then I think they're also forgetting that what you have is pooling of asset resources. I mean, somebody who's got a permanent resident, he buys property for everybody else.
Do you think the Asian purchasing is a big issue?
I do think it is an issue.
Yeah.
I'm not
a big
it's a big issue, but I
issue.
do think it's an issue. And I do think...
In all markets or primarily Sydney?
I think there's a couple of reasons it's an issue. One of the reasons is that the Chinese are used to speculating, and they are big speculators in their homeland country. Now, we have got a calculated surplus of units in most markets throughout Australia. But the bottom line is that my numbers in growth terms aren't showing us so much that those markets are actually oversupplied. And probably they look like they're oversupplied, but they're really not. And the reason is that we've got units that are vacant. The Chinese have bought these units, they're sitting on them, and they're doing nothing with them. They're speculating. Now, that in itself brings about large risks if the Chinese government or somebody just suddenly decided that they needed to dispose of foreign assets, and particularly little ones like residential property in Australia.
OK, let's now concentrate on if someone is interested in getting into the investment property, and a lot of self-managed super fund people are, a lot of people who've paid off their own home think this is the next step, they've got nice superannuation. Where are the good areas? We did show affordability charts up there a moment ago.
We might have a
Let's return to
chart that we've got there that will actually help us out on this.
OK.
No, that's not the one.
I see what the actual chart...
There's an actual chart that
OK.
starts off with rules.
OK.
Our producers out there.
OK.
Now, what really the rules are, that at the moment we should be buying in the capital cities, and predominantly both Brisbane and Sydney are the two cities which I would be involved in.
Yep.
I would not be in Melbourne, and I would not be in Perth, and I definitely not would be in South Australia, and I wouldn't be in Tasmania.
OK.
And I would be worried about being in Darwin. Okay, so we've got...
But they've had massive growth, haven't they?
Yes, they have, and it's now not doing so well.
OK.
Doesn't look like it's going.
So let's focus on Brisbane.
Brisbane and Sydney. They're your two markets.
Yeah.
Now look for properties that are under the median, and then look for properties that are close to transport, schools and health facilities.
Yes.
Now, if you do that, you're not going to go too far wrong. If you're in regional towns in those two states, and we think of New South Wales as not being a resource city or state, but in fact there's a lot of resources in there. Avoid them unless those particular towns or regional towns are towns where there is a lot of diverse economic activity.
Yeah. I remember Gunnedah was doing very well when the coal industry was doing really well. It's probably come a bit off the boil now.
Yes, it has.
Yeah.
But if we look at a regional town that fits right into the category of being a mining regional town that's got a diversified economy, Orange. You've got to have the largest gold mine about 20 kilometres from it in the whole of Australia.
Right, yeah.
Large activity going on there, and there's enough there to keep driving it. So I rather like Orange in New South Wales.
Yeah.
And then in Dalby in Queensland, I'm rather keen on that.
Now, Dalby is of course, a agricultural area. It's had a lot of CSG type lock up the gate sort of thing, hasn't it? Yeah.
Yes, it has. And there's coal and all sorts of things there.
Agriculture.
Agriculture, yes.
Yep.
Right. And in fact, I think they're going to do the first ethanol processing plant there. I think that's where it goes. And then Moray Field in Queensland as well, I would have now. Each one of those places has a median value at under $400,000 and $300,000 range. And they're the sorts of places that we ought to be looking at. And we ought to be looking at places that have got good rental returns, because we can't be certain that we're going to get good capital growth as we move forward. We're more likely to get growth of 1 or 2% above CPI.
Yeah.
And so in those circumstances, what we've got to do is look for good rental returns.
Yeah. Now, is there in most states a base rent that most people are going to have to pay, and it's going to be adjusted accordingly?
Rent is a function of the income of the people who live in the area. And you can't get growth in rent usually higher than AWE. And so you really have to look at the wages or the affordability of rent in an area to understand whether in fact there's likely to be growth in rent or not, and then look at the supply.
I do recall interviewing someone who went to a place called Beenleigh in 2000. Now, Beenleigh wasn't a wealthy area, just north of Sanctuary Cove in Queensland. He bought $1 million worth of property, which I wasn't very impressed with when he told me, because you couldn't get a garage for $1 million in Sydney. But he bought 10 properties, average price $100,000. He was getting rents of about $250. He was positively geared, and then they had enormous capital growth after that period of time. Now, that is great investing when you're positively geared and you get capital growth. Not easily, it doesn't easily happen, but it often happens where all the other suburbs have been, in a sense, bought out, and you're the next suburb along. Is that a strategy that you actually can look at? What suburbs have been really going hard and go to the next suburb?
To some extent you can. Every suburb, no matter where they are, fits into a cycle. And in very general terms, what happens is that the high socioeconomic suburbs grow first, then the middle class, and then the lower socioeconomic suburbs. So you can actually have the high socioeconomic suburbs in a capital city falling in value, but your low socioeconomic suburbs rising in value. They're the last.
So there is like a ripple effect.
There is a ripple effect,
okay.
And they are usually the last ones. Now, and then you can bring that into a smaller situation where you do what you've said, where you look at a suburb and say, well, it's really done well. Will it ripple out? And the answer is yes, it will ripple out to some extent. Not as obviously as going from one socio-economic area to another, but there's definitely a ripple.
And I guess if you're going to go to that suburb which currently is not fashionable, but it's next to one that's becoming fashionable, going for the best street in that less fashionable suburb would be a good start.
Yes, and the other thing is that if we're all going to invest in property and live long enough, it almost doesn't matter where you invest, because at the end of the day, once upon a time, Roseville in Sydney was on the outskirts of Sydney, and it wasn't considered a good place to be. But today, you would struggle to buy anything there under about $1.5 million.
Mate, if people want to see more about what you're saying about real estate, residex.com.au?
That's it. And make sure you get the newsletter.
Yeah, okay, for sure. Thanks, John. So that's John Edwards. And coming up after the break, I'm going to talk to a guy who gave me what I would call a future shock. Don't miss it.